Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, May the 24th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having that all out of the way, let's get this on. A little bit of economic data, not so much across the pond, but here in the United States, we did get existing home sales, came in slightly lower than expected at 5.57 million units versus the expected 5.65 million units. And also, we had crude oil inventories, one of the bigger numbers that we look at throughout the weeks, and that came in at a drawdown of 4.4 million barrels versus the expected drawdown of 2.4 million barrels. Last month's came in line with what they had previously released. So more of a drawdown in crude oil inventories would make one think that they were going to start pushing it a little bit higher, but it looks like it may have already been baked into the cake, if you will, because we are seeing a bit of a pullback in crude oil as it can't really get up there to that $52.50 area. So the overall market kind of shrugging away from that, maybe come back down to the point of control right around there at around $50 a barrel, that psychological level. But just so happens that the most time and volume has been spent toggling back and forth in and around the $49 a barrel. So just slightly lower than that. Anyway, on to the overall markets. As I mentioned, we got this crude oil coming off just a little bit. Gold futures, the candlestick looks like it's higher on the day, but this is down on the day due to the day session. If we were to click that off, you would see that a little bit more clearly. But in keeping this in mind, we are seeing this 50-day start to creep back above that 200-day. So when the 50-day is above that 200-day, it's more bullish. But I'm having to believe that that the gold futures are not really going to move too far away from this point of control, at least in the near term, especially with the equities at the near all-time highs. If we see a pullback in the equities, then yes, we could see gold futures start to push higher. But as of right now, I think it's kind of stuck in a bit of a holding pattern. All of these things coming into line right at the point of control just makes me believe that it's going to need to wind that rubber band a little bit tighter before we get much more of a move anytime soon. Bonds slightly up on the day. All intent and purposes, it is basically unchanged, up 3 ticks on the day, in a very quiet day in the bonds. Fed is having all of their FOMC members speaking. Today we get the minutes later on today. Bonds probably are going to be relatively quiet heading into that event, which doesn't happen until about 2 o'clock Eastern. So those minutes are not going to be released for quite a while yet. Anyway, on to Dow Jones Industrial Average, up on the day by about 34 points. A very quiet day in there as well. Volume has been filled in. When we had this big move down, created a gap, the volume's filled in that gap and in that downward spiral. There wasn't a whole lot of volume happening there at each individual tick. There was a lot of volume happening in throughout the day, but the volume likes to fill in those areas when you have a big move down, and it looks like we've achieved that. So those two objectives have been filled. Whether or not we go to see historical highs is yet to be seen. It's going to really be dependent on the data that we start receiving. Same situation with the NASDAQ. On that big down day, yes, there was a lot of volume, but now we've kind of really filled in that volume in the last several days. So it's tighter range, trading in those price points, filling in some volume. That's the market has a tendency to like to do. with the E-mini S&Ps, same situation. We are starting to see this kind of start to slow down a little bit. I don't know if we're going to snap higher or snap lower at this point. It's really kind of hit or miss for the most part with the E-mini S&Ps, the NASDAQ, and the Dow. E-mini S&Ps, as you can see with this right here, this is the 30-minute chart on about a 20-day increments or 20-day breakdown, I guess I should say. As you can see, when we had that big down move, now we started really filling in this volume. This gives much better picture as where we're trading in that volume where we had the big gaps, and now these markets are getting a little bit tighter. So to me, I'm almost believing like it's really starting to want to roll over again. That would indicate lower highs, lower lows, things of that nature, indicating more of a downward move. But the market could just kind of start consolidating like we saw here and back and forth for a little while until we get more data points. Now on to a couple of trades that I've done. Now if you follow me on Twitter at Wolfman's blog, you saw me tweet this out closer to the end of the day. As a matter of fact, Jeff Mackey and I were going back and forth on lows in a Twitter stream, so you can check that out. And he was right. They did come out with decent earnings. And he actually came out and said it's probably going to be worth around $80 is probably the over under on this one here. And this was after I tweeted out that I had put on that trade. So with Lowe's, I went in and I had sold the May with only a couple of days ago in the weeklies, and sold the 79 puts for 51 cents, collected a credit of 51 cents. Basically bought it back this morning about 20-30 minutes after the open, and for all intents and purposes it was a scratch with commissions and everything else. So at the end of the day, bought it back for about 50 cents and maybe even lost a little money with the commissions and everything, but I look at it as a scratch. This is a trade I added this morning, and it's Verizon, ticker symbol VZ. If you look at this chart, they came up, covered this gap, and now they start to look like they're topping out where it's pushing up against this value area high and failed. So to me, indicative of, lower highs, lower lows, lower highs again, lower lows. We could easily see this go down and create new 52-week lows. So with that in mind, and the market not having, or this underlying not having its earnings for quite a while, I decided to add a put spread onto Verizon and went into the Verizon July and bought the 57 puts, sold the 42 puts to define that risk and collect a little bit of credit, pay for the extrinsic value of that asset, and paid $2.39 for that. So inside of all my rules for that particular strategy. You can go to protraderstrategies.com and sign up for that webinar to see what my rules are on put spreads. Some people buy put spreads that are out of the money. I do not. I wholeheartedly disagree with that. That is a very low probability strategy, and that's why I have set up my put spreads the way I do, is for high probability trades. So check that out at Pro Trader Strategies. This Friday we are going to be doing a webinar heading into the Memorial Day weekend on risk reversals. Kind of mentioned this in the last couple of webinars, but I'm going to go into a little bit more detail on things that the risk reversal can tell you. Can actually tell you whether or not the overall market sentiment in that underlying is relatively bullish or relatively bearish, and I'm going to show you different ways to figure that out. It's going to be pretty interesting. So check that out at Pro Trader Strategies, and if you can't take that, take it easy.